Hi there, welcome to Grain TV. It is Friday, February 3rd, and a down day to finish the week. Let's take a look at GrainEdge's trading platform and see where we closed. In Chicago, corn off 3 cents a bushel, beans losing 10 3/4 on front month March, and wheat in Chicago losing 5. Earlier today was a light news day. There was some outside stimulus from the U.S. jobs report that came in stronger than expected. Overall, that didn't do much for the dollar. It did manage to bolster U.S. equities. But really no real earth-shattering news to gravitate to on grains. It really was more just a risk-off day heading into the weekend. And really, as we look at some of the news that did come out today, it was pretty much negative. First of all, let's start with Informa. They came out with revised production forecasts for soybeans in Argentina and Brazil, as well as corn. In Argentina, they kept their crop estimate for Argentinian beans at 55 million tons. That is the same number they had previously, but it is starting to be higher than what other analysts had 53, in some cases as low as 52, but we're starting to hear, as the weather has been improving, that those numbers are growing as well. So I think 55 is a pretty realistic estimate, and certainly much better than what people were saying a couple of weeks ago when they thought it was going to be 52 million metric tons after the big flood problems. In Brazil, though, they show bigger soybean crop coming in at 106. Versus previous estimates of 104. That follows FC Stone, who also edged up their Brazilian soybean forecast by 2 million metric tons. So, the season so far is lining up with what analysts are saying. That is, Brazil is going to have a record bean crop, and the weather has been pretty much ideal in that major producer, which accounts for about 2/3 of South America's bean production. In corn, Informa slightly lowered Argentinian's corn production estimate to 35.2 million metric tons versus 36. And on Brazil's corn crop, they kept that the same at 89 million metric tons. So overall, it is looking, as we get further and further into the growing season, that the crop is going to be very sizable out of South America, and that has got traders moving to the exits on the long side, especially in beans. Let's take a look at what's been going on in basis. And overall, when we look at basis numbers across the U.S. on average, they have been exceptionally flatlined. Especially in light of the recent rally here. We've seen some weakness in basis, although, this week we saw no real change on corn or bean basis on average. But when we distinguish between processors and river terminals, we see a much different story. Let's start first with the corn market, especially in Iowa, Illinois, and compare where we stand between processors or ethanol plants in red here versus river terminals in blue. And what you have, the solid lines are this year's marketing year basis levels versus the dashed lines, which are the 5-year average basis levels for these facilities. And what you can see in blue, obviously river terminals are doing much better than the red lines or the ethanol plants. In fact, when we see these since the start of the year, ethanol plants have been backing off basis. We'll talk about why that is here in a minute. But river terminals are faring fairly well, actually doing better than the 5-year average, which is contrary to most of the country where we're seeing weaker than normal basis. Now, in terms of ethanol, we have had very good production numbers. Last week's, or the Wednesday's numbers for the previous week showed another record high, but that may be coming to an end quickly as ethanol margins really start to erode. Let's take a look at this next chart, which shows ethanol margins at Iowa facilities. The red line is this marketing year starting in September 1. The blue line is the 5-year average processing margin, and the green line is last year's processing margin. What you can see in red, the peak around December 15th at about 68 cents to 70 cents a gallon, to a drop substantially down to pretty much zero or a little below zero on an operating basis. Now, that's along normal seasonal lines. We expect that. But the question will be, will we recover and get a late season run up into that early summer, midsummer time period like we normally do? There are several things that are concerning for the ethanol market. First of all, the situation in China as they start to do several taxes to limit or stimulate their own ethanol industry. One is to tax DDGs, the other is to tax ethanol. So will that have an impact in the long run here, or at least for the rest of the marketing year? And then secondly, you have the risk of what will happen with the new EPA and what policy stance they will take on renewable fuels. That still remains to be seen, but overall, we're at a point in time when the ethanol margins are very weak. We're seeing processors show no appetite for bidding aggressively on corn on basis, and so it's concerning what may happen down the road. In terms of beans, similar story here with with soybean plants running at a discount to river terminals. But what's surprising here is how deeply discounted the river terminal is to where it normally is this time of year. Keep in mind, these are largely delivery locations against the Chicago Board of Trade futures contract. So as we get closer to that March delivery, then that basis has to get closer to zero. So look for that blue line to eventually get up to zero. And the question will be, will it do it on the cash side or will it do it on the futures side? That is, will futures have to come down or will cash have to move up to get that basis to converge? So that's about 20 cents that we're discounted right now to where we need to be by the end of February, going into first notice day. So watch for that. I think it spells problems for either futures coming down or certainly presents some strength opportunities in basis in the next few weeks. Looking at November beans, we had a pretty disappointing trade day today. Last night overnight we got as high as 1023 before really sort of losing it on the downside. If we look at the 1 hour chart from Grain Edge's trading platform, you can see what looks to be sort of a head and shoulders formation off of these trade activities. The top of the shoulder, or the top of the head, coming around 1023 on the high last night, early into the evening trade session. But we managed to not take that out and actually close down around the neckline at 1010. So if you branch that out and say, where do we go from here? That probably puts us back down to the lows in the $9.95 to $10 range that we established midweek this week. So watch for that potential as a driving force as we come into next week's trade. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you, including lowering your commission costs on your brokerage account to $7 a side, visit us online at grainedge.com. Have a great weekend. We'll talk to you on Monday.